Choosing the right life insurance shouldn't feel like solving a puzzle, but for most people, it does. Two names keep coming up: term life insurance and whole life insurance. One is cheap and simple, like renting protection for a certain number of years. The other is permanent, expensive, and builds savings inside the policy. So which one is actually best for you? Today, I'm going to break this down in the simplest way possible, with examples, charts, and real-life situations. And by the end, you'll know exactly which type of insurance fits your age, income, and goals. Welcome back to Smart Life Insurance USA, where we make insurance simple, honest, and stress-free. Before we compare, let's get the basics right. Term life insurance. Coverage for a specific number of years, 10, 20, or 30. If you die within the term, your family receives the money. After the term ends, coverage expires unless you renew. Whole life insurance. Coverage that lasts your entire life. It never expires. Builds cash value, which works like a slow-growing savings account inside the policy. Premiums stay the same forever. Think of term as temporary protection and whole life as lifetime protection plus savings. Term life is the most popular life insurance in America, and for good reason. It's affordable, simple, and powerful. How it works? You select a term length, 10, 20, or 30 years. You select the coverage amount, $250K, $500K, $1 million, etc. If you pass away during this term, your family receives the full payout. If you outlive the term, coverage expires and no payout is given, just like car insurance. Why people choose term life? Very affordable, best option for young families, easy to understand, high coverage for low cost, perfect for temporary needs like mortgage or raising kids. Here's a real example. A healthy 30-year-old non-smoker can get $500,000 coverage for just $20 to $30 a month. That's less than the cost of Netflix and a cup of coffee. When term life makes perfect sense, you're the main income earner. You want maximum coverage on a small budget. You want to protect your family until kids become independent. You want peace of mind while paying off debts. That's why about 90% of Americans start with term life. Whole life insurance is different. It's designed for lifetime protection, and it includes a built-in savings component. Whole life has two parts. One, death benefit, the money paid to your family whenever you die. Two, cash value, money that grows inside your policy, tax-deferred. The cash value grows slowly in the beginning, but over the years it becomes a powerful asset. Benefits of whole life: lifetime coverage, guaranteed death benefit, premium never increases, builds cash value, can borrow against cash value, great for long-term wealth planning. But here's the truth. Whole life is 5 to 10 times more expensive than term. Example, term life is $25 a month. Whole life is $150 to $250 a month. People don't buy whole life for the price, they buy it for the guarantees. Who usually buys whole life? High-income earners, business owners, people building generational wealth, parents planning financial support for special needs dependents, grandparents gifting money to grandchildren. It's not for everyone, but for the right person, it's incredibly valuable. Term life. Whole life. Cost: low. High. Length: 10 to 30 years. Whole life. Lifetime. Cash value: no. Cash value: yes. Best for families, young adults, temporary needs. Estate planning, wealth building. Coverage amount: higher for lower cost, higher for higher cost. Complexity: simple. More complex. Budget-friendly? Very. Not for everyone. Term gives you the most coverage for the least money. Whole life gives you coverage for your entire life, plus savings and guarantees. Let's get to the most important part, making your decision. Choose term life if you are between 20 and 50, have a family depending on your income, want affordable protection,
have kids who need support, have a mortgage or loans, want high coverage $250K to $1 million plus, don't want complicated policies, want the best value for your money. Term life is best for young parents, newly married couples, homeowners, people on a budget, first-time buyers, anyone confused about where to start. Choose whole life if you want permanent lifetime coverage, have stable or higher income, want to build cash value, want guaranteed inheritance for children, want to create generational wealth, want to use policy loans later in life, do estate or tax planning, want a policy that never expires. Whole life is best for high-income earners, business owners, people building generational wealth, parents with special needs dependents, grandparents gifting money to grandchildren. Whole life is not just insurance, it's a long-term financial tool. Here's a strategy most financial advisors recommend for balanced protection: the hybrid strategy. Buy a large term life policy for protection, add a small whole life policy for lifetime benefits. Example: $500,000 term life, 20 or 30 years, $50,000 to $100,000 whole life. This gives you the best of both worlds: affordable, strong protection now, plus a permanent policy that builds cash value over time. If you're just starting out, choose term life. It's affordable, simple, and gives your family maximum protection. As your income grows, you can always add whole life later. The most important thing is not which type you choose, it's that you actually get protected. I hope this guide made things clearer and easier for you. If you want more honest, simple insurance guidance, subscribe to Smart Life Insurance USA. Your financial protection starts right here, and I'm here to help every step of the way. Thanks for watching, and I'll see you in the next video.